Welcome back in, guys. This is a special series that we're going to be doing. It's called The Digital Street, and it is going to be co-hosted with my friend and mentor, I feel like, when it comes to macro, and that is Rebecca Walser coming in from Walser Wealth Management. How are you, Rebecca?
I'm so excited, Paul. Thank you for inviting me. Thanks for having me. I'm really excited to connect with the audience and talk
It'll be
all
fun.
things finance.
Yeah. Well, this is a show that really gets into the correlation of macro, digital assets, and then traditional finance. So it's kind of this intersection that is all happening at once right now. I don't know that I could ever remember a time when I've seen this. Even if you go back to the dot bomb era where there was a lot of technology innovation occurring and there was obviously a lot happening on Wall Street with traditional finance, but we didn't have this extra layer of digital assets, real world assets, the tokenization of stocks. I mean, all of this is right on top of us now. So a
Yeah.
big deal for
Yeah, I
sure.
call it the convergence of all things. I mean,
Yeah.
it just sounds like a book to me. It's like the
Yeah. Well,
convergence of everything
and
together at the
it's
same
all in
time.
finance. It's all in finance.
Exactly.
Yeah.
Exactly.
So what did you make of the first FOMC with Warsh? Did you take away, because the market was very confused on his positioning. Obviously, he gave us a lot of updates on what he's going to be doing, but what was your opinion and take?
Well, it's interesting because I thought that he threaded a needle very well because we all know that he was appointed by an administration and a president that wants him to desperately cut rates. Let's not
Yeah.
forget that Trump was out there banging that we need to cut rates 300 basis points,
Right.
which is 3% for everyone that doesn't know what basis points are. So, obviously your audience is very sophisticated. But the fact is that, everyone expected him to be like Trump's guy. And but yet he is appointed to do a serious job, and he was at his period of tenure before, he was hawkish. Let's just be honest, he was hawkish. So here's the problem: he gets appointed. His first FOMC meeting is in the middle of a Middle East energy crisis
Yep.
war,
Yep.
which is by definition inflationary. He goes into his first meeting with PPI above 6% and CPI above 4%, which hasn't happened since the Biden years. And so now he's like, "Oh, I'm his guy. He wants me to cut rates, but I have inflation hitting me in the face." What he did was very clear. He talked about price stability multiple times. He really honed in on that. But what he did to thread that needle, Paul, was he basically said, listen, I'm going to create 5 task force. They're going to have a lot of work to do, and it's going to be done by the end of the year. This isn't
Yeah.
some guy coming in saying, I'm going to take 2 years to review and have committees. And no. He's saying, I've got 5 task force. They're going to be done. And the interesting thing, I sent your team a chart to see how how the market did immediately after his meeting. And he's the worst. Alan Greenspan was not looked at, but if you look at Yellen, Powell, and Bernanke, his market reaction on his after his first FOMC was the most dramatic, because what happened was he was so limited in his direct communication and really his forecasting, Paul, of what the Fed is going to do. He was so
Yeah.
limited in that. There's the chart. So you can see this is the
Post meeting
market. This
right
is the
there.
S&P 500, and Warsh is the black line, and everyone.
Yeah.
So
He
yeah,
bottomed out.
he created the market. He created the because what happened was he didn't give enough assuaging assurances that we're going to be okay, and so everyone looked at the dot plot. Now
Yeah.
the dot plot, which normally has 19, only had 18 because Warsh wouldn't even plot his expectation on the dot plot. But
Yeah.
of the 18 that we had, 9 of the 18 showed that we were going to have an interest rate increase before the end of the year, and that is why the market really just said, oh, wow, he is hawkish,
Yeah.
and was taken as a hawkish read. And therefore, the market really dropped. And that's how we took it. But his 5 task force: communication, obviously, balance sheet, which is obviously really important. The balance sheet peaked out 8.955 trillion on 420 April of 20, but now we're at 6.711. Data sources, which I think I love because people aren't filling out the surveys anymore, Paul. There's 2 sets of data sources, and one of them, no one ever fills out the survey. So that's
Right.
clearly a problem. Obviously, he's looking at John's in the age of AI. which I think is the probably the most fundamental transformational work that will come back. And then the last committee is, can we really maintain inflation at 2%? In
Yeah.
other words, with a $6.7 trillion balance sheet that we probably need to run down, how do we maintain inflation? Because they need to be accommodative. They need to, unfortunately, it's a printing machine in order to, have the whole economy stimulated enough to be able to run down the balance sheet. So it's a catch
Well, okay,
22 for this
so
man.
a couple of things to unwrap there, because this is, I think, important. We've talked about it on several shows here. Is this data set that he's going to be looking at? Because most of the time, with Chair Powell, it was a scenario where they were looking at lagging data. So data from arrears. Is this a situation where Warsh, you think, will start to look at maybe something like Oracle level data, like what Trueflation is doing, pulling in essentially real time data? That's utilizing a blockchain right now, Chainlink. So if you have real time data and you could forecast this via AI, why couldn't you give forward looking guidance?
Well, I think that is exactly maybe what he wants the task force to independently come up with and say, right? Like there are real time,
Mm.
real tracking data sources available now that weren't available when all of these original ways of tracking things came in, which were always past, looking backwards. And so now we have more. I have been talking about literally the death of the politician, or at least the corrupt politician, and corrupt I'll use loosely, is going to be over as soon as we put the budget and all of the bills on the blockchain. As soon as we see where the actual, because the AI tools themselves will summarize for us all of the fraud and corruption and all of the
Rebecca,
payments.
come on. They're not going to allow that.
But they have to. They have to. Like this is the first step. This is a huge step. Now the Federal Reserve is not a government agency. It's a privately chartered bank through Congress. But the fact is that this, as soon as the Fed, and I'm praying that this happens, legitimizes blockchain data sources, then you're going to start to see governments moving towards the blockchain. And I'm sorry, but eventually people are going to be like, the budget and the spending has to go on the chain. We have to be able to access it. It has to be public. We have to see it. And that's what they don't understand.
Yeah.
They do an 1,800-page bill, Paul, for a reason, so
Mhm.
that nobody will be able to
No one reads
consume
it.
it, digest it, and read
Yeah.
it and understand what really is happening. It's all by design. So AI is going to cut out all the obfuscation of how the world is really run. And so if Warsh can be the first to be to say, let's use these data sources, that will be huge.
Yeah. Well, and the thing that you mentioned, which is this 3% target, potentially, if we were to see an inflation going to 3% target, do you think the Fed would lose credibility just because of the fact that they were the ones that moved the goalpost?
I mean, I think that the financial business networks will definitely lay the blame on him, but this is a much bigger monetary policy issue. How can you inflate your dollar at greater than 2% a year, if we're honest? Like if we look at the original dollar,
Yeah.
we're in the negative now. So how can you be inflating currency at a faster rate than you're allowing it to be inflated with your actual, central bank that's checking these things? I
Yeah.
mean,
Yeah.
they've had to I mean, it's so sad that the number of ways they've changed the formula, moving to core, which excludes energy and housing, like those kinds of things were always the trickery that we knew. But then they started changing things to only look at they, like, for example, under the Biden administration, when inflation was going so high, they changed the formula instead of looking at the last year's prices and it being year over year to take a 2-year average.
Yeah.
These are the little machinations that nobody follows. That's really just mathematical gymnastics so that they can still have numbers that they can justify. So that's the bottom line. If Warsh can lay out a true policy reason to say, listen, we've had to change these definitions, we've had to change the formula, we've had to change the calculations. You guys just want the truth. So
Okay.
let's have the truth. I
Yeah.
think maybe he could do it.
All right. So I guess my pushback on that would be if we do see if you just consider 2% inflation right now, that's prices doubling roughly every 35 years. At 3%, that means it would double every what, 24 years. It would double every 24 years. And that's bound to put some pressure on workers. You'd need a consistent 4 to 5% annual raises just to see modest gains in purchasing power, I would think. Wouldn't
I
that
don't
be the
disagree.
exact opposite of building productivity in businesses? I mean, that may cause businesses to slow down on hiring.
Well,
And
and
in a
that
time
leads
of AI,
that leads to his other task force, which is, jobs in the time of AI. Because honestly, Paul, you and I have talked about this before, but it just happens so rapidly now. I mean,
yeah,
software, it's hard for me as a layperson to just imagine, well, if I don't have TurboTax, if TurboTax Intuit has been gutted, I mean, the software route has come back with a vengeance, right? So now
yeah,
we're seeing these software stocks down.
mhm,
And the fact is that I sit here and I say as a layperson, well, gosh, how am I going to do my taxes? I need TurboTax to do my taxes. But what people don't understand is that in ChatGPT, you can literally upload your documents, and ChatGPT does know how to complete your tax forms. Like
interesting.
it has layered into it all of the information that these software companies have built into software.
Yeah,
So as people start to actually leverage this and see how much it can actually do for them, this could be deflationary, Paul, in the sense that it is going to make everything so much cheaper from a perspective of we don't have to spend money on it because AI is going to be
maybe
able
in
to
the
do it for
midterm.
us.
Yeah, maybe in the
It could
midterm.
be deflationary, but the
Yeah,
fact is that if we lose our jobs because we have nothing else to do because AI can do it all, then that's not deflationary because we don't have any income. And then we've got a universal basic income issue
yeah.
or something like that. So
I
the
had
whole
Andrew,
thing,
I had Andrew Kang on. He's a early series investor for a company called Robo Strategy. And he and I were talking about that very same thing, is that at some point he felt like governments would have to step in, create UBI at certain layers. And because of the productivity stimulus that this is going to cause, at least based on what they're analyzing right now. And again, a lot of people still believe that AI is mostly slop and we haven't really seen full blown use cases. And if you charge for it at the compute power it really takes, it would be quite much a lot more expensive than $20 a month for your Claude subscription, you know?
yeah, it's
So,
definitely subsidized. There's no doubt
yeah.
about it. It absolutely is subsidized. Yes.
Listen, this is gonna be interesting times. I mean, I thought, the birth of the internet was interesting times and the birth of mobile with when, essentially jobs reformatted everything. I think this is maybe compounded to a order of magnitude in terms of impact on society for sure. Hey, let's
I
jump
mean,
over to the Clarity Act.
yeah, I would
So,
just say with you, Paul, I'm with you. And I don't mean to be hyperbolic, but how we do everything is going to change.
yeah,
So everything is going to change. I mean, this is the largest
big
transition
shift.
to technology and human capability in the history of mankind. Like this is just so far beyond anything we've ever seen. And I love the people that say AI is going to take forever. I think we had a really big analyst say that, oh yeah, well, people will probably be using stable coins in like 15 years for currency. And I laugh because nothing's
Yeah,
going to take
I'm
15
thinking within
years.
12 months, you're going to see so much more of it. I mean,
Exactly.
the really early stage and edgy companies that understand this technology, they've already started utilizing stablecoins. I would say 80% of our customers use stablecoins.
Wow. Beautiful.
Of course, we're dealing mostly with finance and corporate and crypto companies. But even the AI companies that we work with, on sponsorship and some of the other projects that we do, the stable coins are just, they're just so much more easy and safe. The thing, or I should say fast, the thing that is interesting to me is where clarity is. When you look at the the challenge that Senator Warren, of course, is continuing to press on in terms of against the Clarity Act. Then you look at Besant, who has pretty much been on the side of, listen, if we don't get this done, we really run the risk of losing a global power position to places like China and Asia, possibly even the Middle East. You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold Debit Card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. What do you take around clarity getting through right now? They're saying July 4th, we could see that weekend a new set up for the Senate vote.
I mean, oh gosh, July 4th. I mean, really?
That's next week.
It's literally next week. So I don't see that happening. I mean, the two different ones that came out, Senate banking and Senate agriculture, they had to be reconciled anyways. And so I don't even know that that full reconciliation is actually ready to go. Like, in other words, it's not ready to be voted on by the Senate. How would it ever? Because that July 4th date, that was when President Trump wanted to be
Yeah.
signing it. So I don't think it's going to make the 250. Scott Besson describes it as a national security imperative, and he's 1,000% right. I have said this on your show at least twice before, that if we allow the banking lobby to try to put their framework of the way we used to do business, and that is exactly what it is. We can call it legacy if you want to be more respectful, whatever you want to say. The legacy banking system in the United States will end as we know it. It is over. And here's the legislation that's setting up the regulation for that, Paul, for decades.
Well, maybe Jamie Dimon is really concerned about literally the termination of the banking industry. He's not really worried about stablecoins, flight of capital. Maybe that's the beginning of it.
Oh,
So maybe he's on
right.
something. He
Dimon
actually knows.
absolutely, he knows what I'm saying is 1,000% true. The old model of banking is no longer necessary.
Yeah.
It's not necessary. It's not necessary. So if something isn't necessary, if it's superfluous, then the system will find a more efficient way.
Yeah.
Stable coins are more
Always does.
efficient.
Yeah,
It always does. That's capitalism, by the way. Capitalism, look up the definition. It's creative destruction. It's the destruction of the old as you create the new. That's what it is. And so we have a extreme danger here of letting the Elizabeth Warrens of the world literally make the frontier of finance reroute itself outside of the United States.
Yep.
If we do not allow the technology. And I'm not saying just, put a blank stamp on it and say goodbye banks. It's going to be a transition. But to allow the banks to put such yield compression tactics inside of regulation for stablecoin, they're trying to buy time, Paul. They're trying to buy time. They don't want to see the capital flight, but they know as the capital leaves, the industry dies. And so,
well, and it's the innovation too. You're going to see so many products coming out of these neobanks and essentially next generation fintechs that are going to basically rival that of what banking will do. And it mostly will be generated around yield products, but I think a lot of it will be generated around loyalty programs and most likely the ease of use, which is the biggest problem that most banks have right now is their apps are clunky. Some of them are okay, but most of them very clunky. This T+1, T+2 is absolutely ridiculous, which is the problem that I think a lot of banks have today.
Yeah,
I mean, I saw this. We did an analysis on this that banks are now charging you instantaneous access. So you want to transfer from one bank A to bank B, as long as you've used either a Plaid interconnect or you've been able to track a relationship between the two banks before in your accounts, they're charging an instantaneous access of $70 to $100. So a typical wire for everybody, if you haven't used wires much, it's $25, and it's if you miss the wire time, it has to go to the next day. But $70 to $100 for instantaneous access, that tells me that they've been able to do it all along. And now they're charging $70 to $100. Are you kidding me?
I mean, and people are going to be like, why would I pay that? Like, what? Why wouldn't I just use my digital wallet? I'm just confused.
Yeah.
And this is the problem. And obviously we got the first problem, which is so many banks have some brick and mortar. Just the brick and mortar legacy support structure to support a loan is so expensive. And then you've got the employees, and you've just got a very layered legacy system that doesn't have a product anymore, that they can't keep competitive without legislation to make the new product not be as competitive. You see what I'm saying? Like
Yeah, oh,
when
it's
you have to
100%.
put
Yeah.
guardrails around the new technology so that yours just doesn't die on the vine, you know that your ship has sailed. The banking system is ended as we know it. It is now already going to have to start competing. And I think that, when people get worried about the Clarity Act, I would remind them of the Genius Act. The Genius Act
Yes.
passed last October obviously gave us that one to one. So basically saying to any third party in the world that wants to come to the United States and issue stable coins, okay. I mean, you obviously have to do certain things. I'm making this sound too easy. But what I'm saying is you want to come and issue stable coins, fine, but you have to have a reserve of a one to one US Treasury for every, dollar
Ooh,
for every stable coin you issue.
imagine
And
if
that
a
has to
bank
be,
had to do that. Whoa.
well, that's what I'm saying.
That that alone, if you look at
That's what
fractional
I'm saying.
reserve, that
The
wipes them out.
capital reserves of these third party stablecoin issuers is better than our fractional reserve banking system. So then now you've got a threat to the fractional reserve banking system. But then the central bank, the Federal Reserve, also needs to be looking at that because that impacts our money multiplier effect.
Exactly.
So they're
Exactly.
used to pulling all these levers in the open market. And yet, if we don't have a banking system like we used to have, then we've got other issues. So this is all, again, the convergence of all things, Paul. It's all of this stuff together converging. It's unbelievable.
Let me ask you this. All right, so I'm going to share this with you. This is the amount of foreign investment that is essentially coming into the US. It's exploding even more. Net capital inflows surge to 884 billion in the last 12 months. This was ending in April 2026. So this is all this money entering into the US. The net capital inflows have nearly tripled since the start of 2025. What is causing this? I mean, I'm surely, do you guys have international investors?
We do,
Okay,
absolutely.
so
They just have to
what are
have
they
a US
telling you?
resident.
What are they telling you? Why is everybody jumping on the ship here?
So I think it goes right along with the why Paul the dollar is so strong right now. Okay, so you have the Iran situation in the Middle East. You had for the first time, and I won't say that the United States is going against Israel, but I think that you have, and obviously this is recent, so this is not the
Yeah.
reason that we've had all this inflows. But what I'm trying to say is you have a president and an administration that went after Venezuela, that went after Iran, that basically isn't afraid to say to Netanyahu and Israel, hey, we'll support you, but only to
Don't
certain,
go too far. Yeah.
don't go too far. So, in other words, you have a president that has also, I believe, from the investment side, what he has done as in a republic that elects a president and has a elected representative democracy, if you will, a republic. He has made it very clear that even though we don't have a sovereign wealth fund and we're not a kingdom and all these things, we will buy intel. We will make strategic choices. We are here for the technology revolution. I mean, the people that he has in his cabinet, the people that he has, Scott Bessent is one of, I think it's his best cabinet orator of selling his policy, the financial reasons for his policy, the economic reasons for
Yeah.
his policy. So the bottom line is the world has seen a new administration come in and say, we're not dealing with the pansiness of the Biden administration. Excuse my way to describe it. It's not political. I'm just talking about from world affairs perspective. We
Sure.
are decisive. We will take action. We will go to war with Iran. We will blockade the strait. We have, West Texas Intermediate. We are oil independent. We will sell you oil. We will make deals. This is a deal making administration from this is a businessman, and the world is taking note. This is a business administration
Yeah.
running the capital, honing policy regulation around AI, around blockchain, around crypto, and that is positive. And also, I will also say that the other reason, of course, is that China is in financial collapse, Paul, and we're in the war in the Middle East. So
So they're just
what
looking
is
for
their
new places to park
What's their
capital.
alternatives?
Yeah.
What's their alternatives? It's really Europe is a manufacturing disaster collapsing. They've shut down all their energy sources. Then the whole war with Iran situation, the Russia situation, they can't get natural gas. They have massive problems. So you don't really have an Asia Pacific theater or a European theater that is giving you. There are some pockets in Europe that have done well, as you know, but it's giving you just this is the country and this
Right.
is the place where the dollar and your investment is going to be multiplying.
We should probably break in a future show. We'll break down a little bit about what's happening in Mika because Binance has now pretty much withdrawn from the EU. That's a pretty big deal for Binance to step out. That's the largest crypto exchange out there, one of the most innovative. Now some people would say, all right, is that a little sketchy that they're pulling out? Or could they not meet the requirements? But remember, the requirements for the EU through MiCA really started to crunch, and everything goes in effect, I think. Yeah, it goes in effect July 1st.
Mhm.
So what was like all these companies are now shrinking down. Many people would say, well, it's most of those companies were kind of walking dead anyway in the crypto markets. It really is going to boil down to the top 100 companies, much like if you look at the semiconductor industry, the AI, you could look anywhere and you
Yeah.
probably have a top 100.
Yeah.
So I think maybe the EU could put some pressure on it. It'll be interesting to see how that comes together with that, especially after July 1st. Let me jump over to the semi industry because this is something that is affecting crypto. And the reason I say that is because it talks about rotation of capital. And if you look at Micron's earnings, I mean, go follow that stock MU. This thing has been absolutely on fire. So Elon tweeted about this current AI chip surge price, biggest price jump in anything I've ever seen. Did you see the price increase from Apple?
Yes. Yeah.
That's ridiculous.
I know.
25%?
I know, and I think that they made the calculation that their client base, their customer base is loyal enough that they
Wow.
will suck it up even in the midst of,
Listen, I am an Apple user and I am now shopping PCs.
really,
And
wow,
and that's you. I haven't bought a PC and maybe with the exception of some of our production and you know hard AI work PCs, but beyond that, if it's a productivity machine, it's always a Mac.
wow,
I'm not sure I would go with that as much
wow,
anymore. So,
wow.
especially
Well,
with Jensen and what he's doing
it'll be
now with their new
with their
PC.
laptops.
Yeah, yeah. That'll
I
be
lo-
an interesting one to get.
I did, I think it was on Bloomberg TV, and Jensen had just gone to the stage with the AI laptop, and I said, so now I said, I'm so excited that now we get to buy laptops for agentic AI robots. This is great. AI agents, that's great. No, I agree with Elon. I've said this before. This is the infancy stage because you get use cases, and it's funny that you open the show, Paul, saying that there people are poo pooing AI and saying there's not real use cases. You
Yeah.
start to get use cases of really, I did this year with this software or this AI agent, and you'll start to see the use. It's going to be so exponentially fast, and that's why I think anyone that says it's slow is just out to lunch. They just don't understand what's happening. But what happens and what Elon is talking about and what the theory is talking about, of obviously Micron, have had a double beat, massive, massive,
Yeah.
massive, quarterly result. And yet even NASDAQ was down yesterday. And it's just because we as lay people, and I'm talking about all investors, human investors, cannot understand how much is going to be replaced with artificial intelligence. Like, we are just at the infancy stages of this. And so when you start to layer, and if you just go through your day and you think of every single thing that you're doing, just getting gas in your car, the sophisticated supply chains and the computerized robotics that were done to deliver that gas to you, is so unfathomable. But when you AI all
Yeah.
of those processes, that's what is coming. And so we are in the infancy stages. And the problem is that it's so much bigger. If you look at this chart, Paul, you're just like, no, it's so much higher. I mean, it looks like it's like a different company from the
Yeah.
last,
Looking at this chart is crazy because, to your point, for the audio listeners, what we're showing right now is the Micron chart. Just going back to March, this thing is up 280%. This trades like a meme stock,
exactly. It looks like a different company. I mean,
Yeah.
but this is a
And you don't
good
think this
barometer.
semiconductor industry sector is stopping here? You think it's just
Oh,
beginning?
not a freaking chance. And let's think about the fact that we do have now other things beyond just the Nvidia chip.
Yeah.
You've got
Yeah.
Google having saying, and we don't need as it's great to have the best and the fastest. That's wonderful. But for every McDonald's, there's a Burger King. So, okay, there's some things that don't need the best and the fastest. So there's an
Right.
entire intermediate market that is going to come to rise up and say, hey, that's great, but it's unnecessary. The compute can be less. We can have a little bit, so there's all kinds of new things that are going to be coming even in the semi-chip space because, like I said, there's always a competitor to, obviously NVIDIA stands alone, but you're seeing other plays being made. You're seeing different types of chips now being leveraged that don't need to have so much power and so much
Yeah.
processing speed.
So Rebecca, do you think that when you look at the SOX index, which is the semi index that's out there right now, it has Micron become the Nvidia of semis, or do you think there will be a handful of others that will help support this growth?
I do think that it will broaden out. I absolutely think that it
Okay.
has to broaden out because you're just not going to have the ability for one. I mean, they're already they're already fully spoken for. Like a lot of what they've like, for example, Dow
Yeah.
announcing at their quarterly that they were going to have 60 billion in AI server sales in 2027. They're
Mhm.
they're already fully sold those. It's done. Like
Yeah.
so, what that's what I'm saying. One company doesn't have the capacity to meet all of this demand, which is why the prices keep because as if you have a supply and demand problem, if you have low supply, high demand, your price is going to keep going up. But
Yeah.
there's a price where Microsoft and Nvidia and they can't charge enough because they just don't have the capacity. They have to build more capacity. So there's a certain point where that there's no more capacity, and that's I'm not saying that we're suggesting that we're there, but I am suggesting that there's definitely room for more players because we don't have enough as it is. And of course, energy is a whole nother big point of this is
Yeah.
that
All
it's
right.
got to be
So
more
that brings,
energy.
well, exactly. I mean, the other plays that I'm watching, even though Devon Energy is one that we haven't seen yet move, but I anticipate that one's probably going to be one to keep an eye on. This is Charles Bialio. He kind of hits on something that I think is important here. So semiconductor stocks are up 107% this year. Mag 7 down 8. They're spending literally hundreds of billions on semiconductors. So they're basically feeding that semiconductor market. And then you look at the market expectations for the CapEx cycle to continuously or continue indefinitely. That's the question. Can they continue indefinitely? Because this seems like it's a dog chasing its tail a little bit.
It seems like a circular financing
Yeah.
situation.
Yeah. So
Yes.
and this hold is my I'm worried about musical chairs. Someone's going to get caught holding the bag here somewhere, especially on these. How much of a pullback could we see if semis do get an adjustment after what we've seen? I mean, these numbers coming out of micro, it's crazy.
Well, this tweet is exactly right. It is so if you look at the capex spend of just the four hyperscalers alone, now that capex spend is projected to go into mid 2028. So we know that we have at least 2 years of this kind of spending. And Paul, we've talked before, but there's been all kinds of new financing arrangements.
Yeah.
Google just reissuing, 85 billion stock. The hyperscalers last year wrote 121 billion of bonds instead of their average normal 30 billion of bonds. So we're starting to see that these companies are realizing that this is a very expensive monetization and that it's going to take a ton of capex. Well, they're spending that capex now. They're raising it in unique ways, different ways. And obviously, we have some going to IPO like SpaceX, Anthropic, and OpenAI this year. But outside of the people that are going to IPO, we're getting new ways of financing this capex because this capex is what is monetizing or enabling
Yeah.
the monetization of AI. And it's going to take at least until mid 2028, the budgets that we've currently seen. But obviously, Paul, here's the problem. And I can't assuage our viewership that this is not a problem. This is a problem because when you get to a certain point of AI monetization, that
Mhm.
means everything is so efficient, everything is so done for you that we have now entered in the phase of humans not being as useful and as productive. And now we start to look at income diminution. And
Yeah.
that's the bigger issue is no,
Well,
you're
and
right.
everybody's been pointing to the white collar sector as being one of the big ones that could get hit here.
1,000%. Absolutely. I believe the blue collars are safer because it's going to take AI robotics to replace the plumber, the electrician, the welder,
Yeah.
and this is pretty advanced. I will not lie. It is extremely advanced. You can look at our drones, you can look at the robotic war
Mhm.
dogs that, have guns and our robotic dogs that run, jump, roll. I mean, it's unbelievable how far everything is. But certainly white collar, with you thinking with your brain as a human, is going to be suboptimal than thinking with an AI agent. It will be. And I'm not saying we're there yet. And there never is going to be able to be taken away the fact that we have a soul and we have thoughts and we have feelings and emotions. And of course, AI being, sentient is a whole nother area
Mhm.
of, you've got artificial general intelligence, AGI, and then of course they talk about ASI, a superior intelligence. And again, it is true. Like, we aren't going to come up with a logical, reasoned, patterned answer that is going to supersede, if it's just a mathematical answer that will supersede an AI. Now, if you have to have some creativity and some art and some emotions, then that's different. But that's not what AI is about right now. So
Yeah.
this is a problem. It is a cycle that will end in the total change economically of the way we live and work.
Yeah.
And that is the truth. So no, it will not last indefinitely because we are basically making ourselves obsolete in this entire process.
Well, that doesn't sound good.
I know, but it's
Uh,
true.
it doesn't. Of course, I look at it in the era of the .com growth. There were so many industries that were pretty much eliminated, but it also created new industries, around it. So, and I look at this and I think that tech is eventually it finds a way that those kind of things happen, especially when you look at the creativity of humans and what our ability is in terms of being able to flex around our environment. And I think that will be somewhat the case here. Of course, it'll be a little bit different in the sense that we've never seen this kind of really glass ceiling being broken before, at least on the tech space. So a lot
So true.
happening there. Let's look
Yeah.
quickly at the charts. Well, actually, before we go to the chart, I want to reference one thing, and that was the amount of money that households are sitting on right now. So
Mm.
this is new data coming in. US households setting on 3.2 trillion in cash. That's a record high. So I thought everybody was in the stock market. I mean, with all these semiconductor stocks flying, where's that liquidity coming from? So you got 3.2. Is this the conservative investor that's just holding cash waiting for a major pullback? What is this?
It's interesting. I mean, it's really interesting because we haven't had really, under Trump at least, a lot of stimulus programs. The one big beautiful bill did increase the average tax return for the average family, Paul, this year by about $1,100. So, but that's certainly not the reason. So, I don't know. I'm not sure why, because we do have massive investment in the stock market. Participation is one of the widest it's been. So
Yeah.
I don't understand where all this capital is. Maybe they took profits from Micron and Nvidia. I don't know. I'm
Um,
not sure.
because
I'm not.
the debt to income ratios is because of the delinquencies that are out there. There's a lot happening
Yeah,
in delinquencies right now,
that's right.
which makes me think that it's almost as if our society is literally getting a two system society being built around us. And if AI only continues to accelerate the ones who are setting on 3.2 trillion, because they're going to figure out ways to make money with this,
For sure.
businesses, entrepreneurs, but the amount of total household debt is still spiraling
Yeah.
upwards,
Yeah, and
so
I mean, our credit card debt hit our highest at 1.3 trillion, in
yeah.
I think May last month.
And
So,
disposable income is as low as it's ever been.
but yet the savings is up, which is
Yeah.
again and again. So I'm wondering if we have a data problem. Like,
Okay.
are we counting
We're
data
getting real access
accurately?
to real
But then again,
information.
these are coming from the banking system, so the money's there.
Yeah. All right. Couple other things. I do want to get onto the charts here for you guys because I know many times we look at the market right now. Bitcoin trading at 60K. If you look at digital assets right now, and I know this isn't financial advice, but first of all, are you seeing traditional finance investors still interested in digital assets?
Yeah, absolutely. Yes, absolutely.
So still high interest. People are going in, maybe, just, small percentages of portfolios, but fact is they're not turning away from what's happening right now in the market.
I think that, it was obviously decentralized finance started out as decentralized, but the second they democratized it by putting it into ETFs, tradable, liquefied tradable ETFs,
Yeah.
I think that actually sent a message to the investor that thought that that was such a foreign concept that they would never participate in. Oh, you mean I can buy it through my Schwab,
Yeah.
custodian cat for? Oh, okay. Well, then maybe if Schwab is putting it is, it's like it's almost like it's been stamped a rubber check mark for the guy that was thinking that it was too weird, and now he's going to buy it through the ETF. So
Mhm.
certainly the ETF flows are a great thing to watch and kind of see. And you can kind of get a barometer from that, Paul, of like just how
Well, they've
people are
been
feeling
trending
about it.
down on both on Bitcoin and on
For sure,
Ethereum,
for sure.
for
But
obvious reasons. But
yeah, because for sure. But the fact that the flows reach and have reached what they have on scale is the point. Like
yeah,
it's just
that's a big deal.
yeah.
Looking at the chart here on Ethereum trading right now as we record at 1570 and some change down 3 days, but we may get a green day here. It looks like Bitcoin also trading at 60,000, though it has dipped under 60K. And many people concerned about what's going to happen with MicroStrategy and the stretch asset, which is the preferred credit product there. I won't dive in too much on that one just because it's been kind of covered so much. We did a video on it yesterday, so if you guys want to go check that out. XRP holding at $1.04. This is a major defense for XRP.
That's a wonderful.
If it
That's
does,
great.
if it loses this dollar,
Mm,
this could be a challenge for the XRP army out there to hold that
mm.
position. How long do you think, if you look at the macro environment we're in right now, Trump gets a deal with Iran in some way, we start to see the reconstruction of energy overall in the sense that we're going to see much lower prices than what we're seeing at the gas pumps. Do you think timing is really important here going into the midterms?
There's no doubt that, it's so funny because I think you and I talked about it on another interview, and I said, I really hope that we get this done by the summer so that the
Yeah.
midterms aren't impacted because, listen, whether you're pro this administration or against, he's pro crypto.
Yeah.
And we need him to not have distractions away from that, which would be a divided Congress, would obviously probably do impeachment again for all we know. So, like, I don't want that for him. So, I'm hoping that the administration that is pro crypto, pro business, pro American capital growth has all the tools that they need. But the truth is that unfortunately, Paul, there very well could be some kind of big economic shock that creates some kind of market consternation before the end of 2026. It wouldn't
Okay.
surprise me at all. It's definitely, I have it in as a very strong, probable, possible.
Like Black Swan level or
I mean, I hate to say black swan level. I don't want to scare people, but I do feel that even just with the positions of metals and gold and silver, for example, you saw them depressed this year. You saw them really down. We reached high on January, lows in March. Obviously, we can explain commodities away as a risk, behaves as a risk on asset. Anytime you have any kind of Middle East energy crisis, it acts
Mhm.
as a liquidity raise tool for central banks. But here's the issue that I'm having right now that is making me feel like there's some kind of underlying financial system issue globally, macroeconomically. And that's because the second we got the announcement of the Iran deal, and obviously it's a 14 points and it's an
Sure.
MOU memorandum, and yet we have on there no nuclear weapons, and we need to get a bigger deal together. But the second that that came out and you started to see the market reaction positive, you started to see oil drop immediately, gold and silver depressed further.
Uh,
And that, Paul, does not make sense. That's a non sequitur. That does not compute. And so that tells me that there's some other underlying fundamental problems globally.
yeah.
And I'm really keenly aware that something is not exactly normalized. So I'm
I'm looking
hoping
at
we
the
get
gold chart
normalization.
now.
Yeah.
Yeah, gold well, down from its high over 5,500, but now holding at that 4,000 mark, which is interesting because this has been a steady decline to your point. And even the S&P off that top right there at 76, what was that? Yeah, 76 on there and some change. Sliding in right now at 7,300. Where would you call the S&P 500 end of year?
Well, I definitely think 8,000, barring this economic situation, event, if you will. It
Rebecca,
could
we're
be.
getting short on time here.
I know, I know. So I would say if everything was to go back and we were to continue to have this AI boom, that we could easily see 8,000. But at the same time, I'm not. I do not. I definitely has a as a high probability even that we could see some kind of economic, unfortunately,
Yeah.
match that gets struck. So this year is really just an odd year. And again, until I see fundamentals return to being what they should be, I'm going to think something's is not quite right with the global markets.
Silver back into 53, gold trading at 4,088, and the S&P setting at 7380 here. We record on the week of June 26th. So we're going to be doing the digital street with you guys. Rebecca and I will be breaking things down like this and much more. We'll be looking at all sorts of analysis here that really gives you guys hopefully some insights to how to deal with these very volatile times. So Rebecca, thanks for coming in.
I enjoy it so much. Thank you for having me, Paul.